When it comes to trading in the financial markets, there's a lot more to it than people think. It's not just knowing where an entry point is, where to place your stop loss and a take profit level, then hoping on a 50-50 flip a coin chance that you might get a win that day. There's more to it, and if you're at that point in your journey, then you've got some stepping stones to make. So stick around if you want to learn exactly how I backtest and build data, and also use a very simple plug and play indicator tool that we've built as a team so you can go ahead and build months and months of data very, very quickly with ease. So there's several things that you need to know and understand before it comes to building data within the financial markets. First of all, what does it actually mean when I say building data? Well, you have sort of two types of data that you can build within the financial markets. You've got live data and live track records, where you're executing trades within the live markets on a day-to-day basis, following your strategy, and therefore you have a history of trades that you've taken yourself in real time, that you can look at the win rate, you can look at the average risk to reward, you can look at the duration of the trades, and a whole bunch of other factors that you can look at when it comes to that live data that you've built. Now, before you go ahead and build that live data, you have our other type of data building, and that is backtesting data. So backtesting data is essentially where you look over a history of market data and previously printed price action, and you essentially follow along with that previous price action, sticking to your rules, taking trades every single day or whenever the market conditions align for you, and you essentially build up a history of previous price action with your strategy that you've got. So following your rules in the markets, looking at previously printed price action, and then simulating trades in order to see how well your strategy would have done in theory based on previous market conditions and previous years of market history. So how do we actually go ahead and build backtesting data? Well, that's exactly what I want to show you within today's video. Now, there's several things that you're going to need in order to actually go ahead and start building backtesting data. The thing number one that you're going to need is a strategy and a trading plan. So I'll go ahead, pull up my strategy and trading plan and give it a breakdown for you. So as you can see on screen, this is the trading plan that I personally use for the Samurai strategy. Now that's the strategy I mentioned at the start of this video that we've got completely coded now into a semi-automated algorithm where you essentially see all the trade ideas and you then execute on those for yourself. Now, without leaking my trading plan to you guys, and if you do want access, then it is within our community Discord. There's a link down in the description that you can find for yourself. But essentially, this trading plan outlines absolutely everything on how I would trade in the financial markets. So it covers the pairs that I want to trade, it covers the time frames that I look at, it covers news rules, it covers the Asian session changing throughout the year based on daylight savings, and it allows me to see essentially when and why I want to enter trades based on certain confluences. And these are obviously outlined and tested and then put into a backtest report so I can further solidify and confirm the trades that I'm taking following this plan are ones that are going to be profitable over the long term following consistency. Now, with my trading plan, I've outlined absolutely everything. So if you want to see what I've outlined in my trading plan, I'll put a pop-up on the screen so you can see all of the sort of subcategories that I've got that I personally have inside my trading plan. And then it's down to you to go ahead and build your own when backtesting. What's also important when it comes to building backtesting data is understanding sessions throughout the year. Throughout the year, as you can see on screen, daylight savings change. Now, this isn't just based on the UK or where you're based. This is worldwide. We're trading the worldwide market. So as various different countries plus or minus 1 hour throughout the year from their daylight savings, we essentially want to make those micro adjustments within our day-to-day trading. So if you take a look on screen here, as you can see, we've got Asian session impact with daylight savings. So it's got the dates, change my sessions, and then it also provides me in UK local time what point I want to change my Asian session to, so then the range is accurate. There's so many people that go ahead and try build backtesting data and they don't account for the small things like daylight savings. This is so important. If you mark your session wrong and you're basing your entire strategy off of liquidity from that session that you've marked incorrectly, then you're simply entering invalid trades within the markets. So it's very important that you've covered every single factor, and this allows you, when backtesting, to fully see what all of those factors are. As you're running the history of trades, as you're looking over data that you've built, you're able to actually see, oh, okay, I'm making a mistake here. How can I go ahead and improve it? Remember, you never make a mistake in trading. It's like a sat nav. You're simply recalculating the route and finding another way to go about what you're doing on your day-to-day basis within the markets. So we simply recalculate the route and we go again with the new knowledge that we've got. And that's why backtesting is so powerful. It allows us to see things, patterns in the market, months not to trade, when to trade, times to trade, pairs to trade. It allows us to understand everything without just throwing and burning money in the live markets itself. So that's step number one, is having a trading plan that you can go ahead and follow that completely outlines all of the strategy confluences and how you're going to enter trades in the markets. Now, as I mentioned, this complete trading plan is available to all of our members inside our Discord community. So make sure you find the link in the description and join up to that if you want to gain access to the personal confluences and reasoning on the trades that I take every single day and why I do so. Step number two, when it comes to actually backtesting, is just setting up a trading and analysis platform that you can go ahead, use replay mode and backtest on. Now, there's several ways that you can go ahead and do this and several platforms that you can use to do this. Some of the popular ones are FX Replay, TradeZella, and then also just TradingView and using the bar replay mode. Personally, for this video, I'm going to be using TradingView because that's what I've been using for all of my backtesting across the past sort of 12 to 18 months now. So I'm going to go ahead and just break down how I use TradingView to backtest this Samurai indicator strategy. So first of all I do is pull up my trading platform. Once I've pulled up my trading platform, as you can see, I've got Asian Sweep SMC strategy, and this is essentially the strategy that I trade on a day-to-day basis, coded into that nice and easy to use plug and play indicator. So if I double click onto that, I have a plethora of settings here that I can go ahead and change. Now, you may remember from a minute ago when I just discussed the changing of the Asian session based on daylight savings. So as you can see here, I have settings to go ahead and configure this for me. At the moment, I'm back testing, and the month that I'm in means that my Asian session essentially runs from 1 till 7 a.m. UK time. It changes throughout the year, and it's important that I stay on top of that as I work my way throughout the year and throughout the months, because remember, we're treating this as if we were to be trading this in live time. So if you're going to change something in your back testing and then keep that as a permanent thing that you're trading, you also need to do that in your live trading. There's no point building back testing data, coming to the live markets and just having a massive loss streak, being an unprofitable trader and not knowing what you're doing because you had a bunch of other things that you built your data on that you're now not implementing. So it's always important to make sure when you've built that data, when you've got new rules, that you carry those across into live market conditions if you are trading in the live markets or back testing live on a demo account, for example, and you're just building data, live market data using a simulated capital account, then you want to be following all of the rules of your previous backtests and previous data that you've built. Anyway, back to the point. So I've set up my indicator exactly how I want it to be, exactly how I want it to run for myself, and then I essentially allow it to play out the trades and I go back through a history of time. So to show you how I do that, I select this button up here, which is the replay mode. I then select a date. So let's say I wanted to backtest the entirety of May 2025. What I could do is just go to the start of May 2025, pick the first date in that month and select it. It's then going to take me back in time to that date. Now, as you can see here, I've previously backtested trades. I've got, plotted trades that I've placed and then taken the data off. So this is 3.18 risk to reward, the entry point, everything like that. I note it all down, and that's what I'm going to show you next, is exactly how I collect and gather all of my data and lay it out nice and easy on a sheet. So essentially, once I've rewound to this day, as you can see, there's now no candlesticks printing in front of this point of price action. So all I'm going to simply do is play through the day of price action. Now, I've got mine set in 10x speed. You can go ahead and adjust your speed if you want to down here. And then obviously I'm making sure everything else aligns with my strategy. So broker feed that I'm using, pair that I'm trading, strategy settings that I've got set up, time frame that I'm using it on. So 5 minutes what I trade, 5 minutes what I backtest on. It's very simple. You are following all of the same conditions as if you were to be trading yourself in the markets. I then allow this to play out. I went through my Asian session because that is my first sort of confluence that I'm looking for. And then I just tick off my box. So I go, was this an accumulation session? Yes, no, blah, blah, blah. And I look through that and I follow my set of rules. I then look for my next confluence to play out. If it doesn't happen, as you can see here, opposite range was hit without any trade idea. I simply just play forward to the next day. And all I do, I take the data from this day, I plot that into my sheet, and then I move on to the next. Now, personally for myself, I don't plot any of the days that I don't take a trade. I'm only interested in plotting the trading days that I do actually go ahead and execute on something. And that allows me to see if I was trading, what would the outcome be? There's no need to go ahead and plot down if I wasn't trading and I didn't place a trade, what was the outcome, because I didn't place a trade. So it's very simple. We just follow everything within the market. So the next day that printed, as you can see, we had the valid session here. We then had the next set of confluences and then found an entry. Now, because I found this entry, I want to go ahead and plot it into my sheet. But what do I actually mean when I say plot it into my sheet? Well, that brings me on to my next point. And my next point is, where do we gather, collect, and place all of the data that we've built from backtesting? Well, we do that on a nice and simple Google Sheet. So let me pull it up so you can see it for yourself. So as you can see on screen, this is the sheet that I've currently been building based on the confluences for entry that I've found here. So for example, this is a trade idea on Friday the 2nd of May. If I go ahead, go to my sheet and I go to May and I look on Friday the 2nd, as you can see, here's the trade idea. If I look at the first one, that's the trade image. That's the trade on screen. So this is my backtest data report that I've been building for this strategy, just to try out different variations and see if they're worth taking to the live markets. So all I'm going to do is basically explain how we enter data onto this sheet. Now, the way in which I'm going to do that is by breaking down this trade that I've pulled up. So nice and simple. Now, if you want to access a template of this sheet in itself, I'm going to link one down in the description. This is just a view only document, so you can just see basically an example on how we've got it set up. Go ahead, create your own sheet, and then start building data around the same way that I'm doing it. The reason why I say it is because it's super simple. This is all laid out for you. It's very easy to go ahead and backtest on. All you need to do is input the data. It will color code things for you like losses, wins, and then at the end of it, you just collect the month's worth of data and round up the results. And I'm going to show you how you can do that as well. So taking this trade that happened on the 2nd here, I'm just going to mark it in a different color so we can identify amongst the other ones. Now, all I simply do is on the start of this day, when I'm obviously going to be in bar replay mode, I allow the first session to play out. Once that's played out, let me remove that position. I'm then looking for my other confluences to be met. Once they get met, I basically plot the trade myself over the indicator. Now, the reason why I do this is because with the indicator, you can't see the risk to reward ratios unless you plot the trade manually over the top. So all I do is just plot the trade on top of that, as you can see like so. And then what it does is it provides me all of the data. So I can see from this trade, it's a 3.35 risk to reward. I can also see the entry point in which this trade was taken, so 9:30 in the morning. I can see everything about this trade. I can see the amount of pips that it was for a stop loss, so on and so forth. Then essentially all I do is I allow it to play to the outcome. So this trade was a loss. Now, I just simply note that down as a -1R because this was a 1R loss. So first of all I do is I come up here to the camera icon, I select that and I select copy link. What this essentially allows me to do is copy the screen image of my trading view and then plot it into the graph. And essentially that's then my trading view image. So if I pull that up, there you go, there's my trade. That is why we do this. So you can see that we're not cherry picking trades, we're taking accurate data. And also if I wanted to look at, okay, a new variable that I've got, I can review all of my historic data. I've got images of each of them. I can look at what would have happened if I was to go ahead and change X factor about this, and I can then see all of my updated data around that. And then next, all I do is I simply look at the columns. So we've got entry time, original risk to reward, but essentially, first of all, let's plot the data. So 9:30 was the entry time. All I do is come onto the markets. I look, when did it enter the trade? So it entered at 9:30. That's where I simply plot that. Now, I operate everything in UTC London for my charts. If you don't understand what I mean, come onto your trading view, click down here. You'll then scroll down, you'll see UTC London. If you select that, what this means is it's going to line up with Forex Factory. Forex Factory is where we get all of our news data from. So throughout the year, it's going to update the daylight savings for the UK. Forex Factory is going to remain in UK local time. So as the daylight savings change and you're looking at history of news, you're essentially able to view the aligning time frame. So this is what I said before about you want to make sure everything's one and the same and accurate. So I use UTC London for all of my back testing. I jot everything down in UK time throughout the year, so it's always UK local time. So once I've got that set, I then look at the time, I plot that time onto my backtesting sheet. I then plot the risk to reward, which can be found after I've plotted the trade myself over the top of the indicator. If you're using something like the plug and play indicator, obviously if you're just manually trading, you look at your confirmations, you plot them out yourself, you then mark a trade, and then you take the data from that manually placed trade. But essentially here I can see 3.35 risk to reward. So what do? I plot in 3.35, simply change that there, adjust that, as you can see there. And then it was a loss for this trade, so I put L for loss and then -1 as my outcome. And then this is where it slightly differs. So personally for myself, I'm building data around news. So when we go onto news, if I pull up Forex Factory now, as you can see on screen, here's Forex Factory. This is what prints out all of the news events, as you can see here. Gives me a forecast on the high impact news. Now, if you want to know what I've got for my Forex Factory filters, go ahead, watch the next part of this video. If not, skip ahead a little bit and you'll get back to the back testing. Essentially on Forex Factory, I click the filter option here once I'm logged in. I think you have to make an account before going ahead and being able to do all the filtration. And then I simply keep the high impact red folders and I keep the gray folders. The reason I keep the gray folders is because they're the bank holidays. Personally, on my strategy, I don't trade major US and UK bank holidays, so I want that ticked just so I can identify when those days are. After that, I leave everything in terms of currencies and events all ticked and click apply filters. This then just slims down. So if I just show you what it would look like if I had everything selected in terms of yellow and orange folders, which are much less impactful. As you can see here, it looks really messy, it looks really confusing, and in terms of what we're trading, we don't actually need to see all of these events on a day-to-day basis. So we just simply untick those two, leave the rest selected, 2 events for the day. Nice and simple news viewing, as you can see there. Now with my strategy, I don't trade any high impact events that are for my pair or for the US dollar within a certain time period before or after that news event. So I simply look at the news for the day and I go, is this for my pair? What time is it? And then I allow for those times before and after. But by building data here, what I do is I leave the original result. So completely ignoring all news, as if we had no news for the day, what would the end result of that trade be based on just the strategy in itself without accounting for any news factors? And that's where I note down the original result. So if I just look at this trade, I completely forget any news for the day. What was the end result? -1R, because this was a stop loss. So I simply take that down as my original result there, and that is the raw form data without any news impacts, without any speeches, events, anything like that going on. Simply place the trade, what was the result? That goes in there nice and simple. Once that's done, we then move on to win/loss if we were to pull for the news. So based on my predefined set of rules, I have an exit condition when there is news in the markets, as I just mentioned a minute ago. So I check Forex Factory in the morning, I see the timings in when I don't allow trades, and then if I was already in a trade, I would pull it before that news event within the set time. And if I wasn't in a trade, as you can see on this one, if I wasn't in a trade yet and that news event played, post that news event, when I then allow myself again to enter trades, if I would get back into the markets because it's retested my entry, I would simply note down the time for the day that I re-entered into the market post that news event. If you get a little bit confused, because I know I just covered a lot, simply rewind, watch it over as many times as you like. That's the power of this video. It is here to stay, so you can go ahead and watch it whenever you please. But essentially what I do is write the raw result, and then I write my news condition rules down here for when I pull trades within the markets. After that, I need to know what news I'm pulling for. So I go ahead and jot down all of the news for the day on every single pair. I don't just specifically write this for my pair. And again, the reason is because I'm data building. So if there was a certain Chinese news event that affected the pound for some reason, I'd want to know about it. And the reason I can do that is because I've wrote down every single Chinese news event, so I can go ahead and see if patterns are forming across a duration of time. So I take the news events for the day, I write down the time, the pair, I write down the news event itself, and as you can see here, I've got the time, the pair, the news event itself, time, pair, news event, etc. And those are all plotted down, so I carry across all my news events and mark those out. So I can go ahead, like I said, analyze after and view if there's any patterns or any opportunities to make more money with my strategy by filtering certain news events out. Once I've done that, obviously I just continue throughout the month. So I'd then go on to the next trading day. I'd see when the next trade got plotted by the plug and play script. That's what's so powerful about it, is I'm not manually sat here like I used to be, you know, viewing every single confirmation, waiting for things to play out, questioning with a bit of discretionary if it was or wasn't something. This is just done for me. This is mechanical. This is as accurate as you can get in terms of a automated strategy, because it is built for me. There's no emotion, there's no human decision made into what I'm doing. It is done for me. So once the next trade's plotted on the graph, as you can see, this was second stop loss of the day. We are not scared about it. We don't care. This is just part of the trading plan. And the reason why I know that is because I can look through my trades. I can say 9 are up for this month, 8 are up for this month, 4 are up for this month. You know, I can look over my data and say, okay, even with, you know, a big loss streak here that was then filtered out by my news rules, which then proves my news rules work, we still came up on top and we still had 8R achieved for that entire month. But once I've got that second trade, all I simply do again is I plot it out myself. I take the data, I take the opening time, I go onto my charts, I then look at when did I place that trade before. Okay, so I place that trade here, I then open up my next one. As you can see, there's the second trade there, and I've already gone ahead and plotted all the data out. Now, the reason why this was a no trading day is because of those news events. So based on my news rules, we had this high impact news event for the dollar here. And with my news rules, it meant that I couldn't go ahead and enter this trade. So I simply jotted it down as no trade taken, 0 risk to reward achieved. The only other time you may have 0 risk to reward achieved is when you actually have a loss in the market that is essentially a break even. Now, the reason why I call this a loss in the market is because when you take a break even trade, you're going to normally get caught out by spreads, commissions, etc. So you are going to see a very slight drawdown. So it is actually accounted in a track record as a loss. So if anything, with this track record and data that we've built, we're giving ourselves more losses than less and not cutting corners, and we still have a profitable and proven strategy. So that just shows, don't cut corners, just work hard and build the right data and build the right strategy. But essentially all I'm doing is just plotting the data that I'm visibly seeing myself. So I go through the month, so starting in January, I then work my way throughout that point, I then go February, I then go on to March, and it's when I get to March that I have to go ahead and look at this. On the last Sunday in March, this is when the UK moves to BST or UTC+1, where the clocks go forward by an hour. However, Sydney, Tokyo, and New York times remain unaffected by this. So that simply means my Asian session moves from midnight to 5 to 1 to 6. So I go ahead, I adjust my indicator settings based on this back test, and I go down here and it says sessions. I then change that to the appropriate times based on when the daylight savings is. This allows me to always keep, as I mentioned, my data as accurate as it can be, following the changes that happen throughout the world during the year. So you're building backtesting data and you're running through all of these months of trades. Now, what do you actually go ahead and do with it? Well, you summarize it. So you break down at the end of each month what your data has achieved throughout that month, and then you look at it over a longer period of time. So 1, 2, 3, 5, 10 years of backtested data, so you can go and see if your strategy is proven through all of these different market conditions. You're essentially making your strategy as robust as it can be through building this data. Now, I'm not saying start today backtesting and then do exactly the same thing all the way through for the next 10 years, even if it's unprofitable. What I'm saying is start building the data and view where you can make adjustments and improvements in order to strengthen your strategy that you're taking, in order to make the quality of trades that you're entering higher quality positions within the markets. How do we go ahead and summarize all of this data? Well, we do that with some very simple math calculations. So if I just go ahead and pull up my backtesting track record, at the ending month, I've got this. I've got the month that it was. I've then got the number of trades taken. That's very simple. We just add up the wins and losses here. There's the number of trades that were taken. Now, win rate is going to be the sum of all wins divided by the total trades. So if I just go ahead and use this particular month as an example, we had 7 wins in here and 12 trades total. So if I pull this up and I do 7 wins divided by 12, and then I multiply that by 100, this gives me my win rate, 58.33%. As you can see there, I've put in 58% as my win rate. And then for the total RR, this is a really nice feature within Sheets and Excel. You literally just take from the top column, drag down to the bottom, you'll have a drop down in the bottom right hand corner and it will give you your sum. And your sum is the total achieved plus and minus all of these figures and datas that we've entered. And that's why using this Sheets template is quite useful, because it's all factored in the way that it's laid out. You're not entering in like total RR this number and it can't give you a sum. It is literally data to the point. There's the calculation, 8.09 RR achieved. There you go. That is what I enter in. That is my data summarized. So 2 quite nice and easy features that you can use: a small calculation for your win rate, and then obviously your total risk to reward is done by the sum, or you could just go ahead and add up all the wins minus all the losses and that would give you the same. But this is essentially how I build backtesting data within the market. So once I've got, say, 2 years of data on one particular set of rules, I then adjust it and I go ahead again and run through that same period of time on a different adjustment. The reason why I run the same period of time as what I did on another backtest is because I want to see the data comparable. I want to look at one, say, version 1 of a strategy against my version 2 of a strategy, and I want to compare how those are against each other. There's no point trading the whole of 2024 with one certain version and then trading the whole of 2025 with another version and then saying, oh, how do these compare? Because you're not comparing the same price action, you're not comparing the same time frame of data. So build your data along the same thing. If you're picking like a 2-year time span, use every variation that you've got in your head on that 2-year time span to then essentially determine which is the most profitable, which carries the kind of strategy that you want to trade. Is that one with a really high risk to reward but a lower win rate, one with a really high win rate but a lower risk to reward? Whatever it might be, you can optimize that strategy for how exactly you want to trade, and you can also go ahead and define timing rules, news rules, and everything else like that within your strategy. So yeah, go ahead, access this template, and if you want to get my personal day trading plan as well, you can get that in the Discord, which is found in the description, so make sure you join up to that. Go ahead and find my complete trading plan that you can access. But that's been all from me in this video. I hope you now understand a bit more on how I personally build data and backtest within the markets using TradingView's replay mode and a simple Google sheet like this, and I will catch you all in the next video.